What's up, everyone? Today is December 30th. It's Thursday. I know the market is still open, but I wanted to go ahead and, make a quick recap video on the Netflix trade I took today. Before I go into this video, the year's almost over. We only have 2 trading days till the new year, so it's always important to just go back, go through your trading journal, go back, reflect on your biggest accomplishments, on your mistakes. Even outside of trading, just reflect on yourself as a person. Your biggest events, your biggest mistakes. Trading and life are kind of intertwined, so everything is a growth and learning curve and a journey. So it's always just important to go back and reflect. Also, it's good to spend time with family as the year is ending. But that being said, I want to cover the one trade I took today. That trade was on Netflix. It was a break-even trade. I ended up, netting 2.8% return on investment. So it was a break-even trade, but I still want to cover it because I had a really, really high quality setup for it. It's just that the market was lacking continuation, and my plan didn't go as expected, but that's okay. That's kind of how trading is. As long as you have a profitable plan, you never know which ones will be your big winners. You never know which ones are going to be your small losers or small winners. All you can do is execute and just hope at that point. And most essentially, just follow your plan. But let's go ahead and so I'm gonna blank chart on Netflix. Okay, I have an alert here. Not too important, but the first thing to keep in mind is Netflix is not one of the strongest stocks. But what I really, really liked about Netflix was this downtrend line right here. And it wasn't the cleanest breakout. Today we haven't clearly broken out. But if you just look on a higher time frame, Netflix has been consolidating for quite some time. And I had this major, major downtrend line drawn. So my thinking was, now if we go to a 1 hour time frame, not only are we breaking this major downtrend line, but we have, it's not the cleanest of resistance levels, but we do have resistance right here at, I think it was 616.85 or something like that. So, this level by itself, I want to make this clear. This level by itself, I would definitely not take a breakout of, because it's definitely not the cleanest level. It's on a shorter time frame. Didn't really respect it too much in the past. But what I was kind of going off of was this major, major, trend line, or this major downtrend line on a daily time frame. So that combined with this shorter key level, 616.85, could definitely cause an explosive move to the upside. And it could be the start of momentum on Netflix. So that was kind of my plan. I forgot to draw some zones, so let me go ahead and draw those out. Zones give me an idea of where big institutional buyers and sellers are placed, and they also give me good ideas for profit targets and caution areas. So this is one of them. This was 4 hour supply. Obviously, this would not be my target because Netflix is not going to move 50, whatever, 40, $50 in a day. That's kind of just a fact. You can never expect to move that big. And on the demand side, I had this 3 hour demand zone right here. Didn't really have any clear supply zones. So my targets were pretty simple. There were 620, which is the first psychological level, and then we have some resistance here at 630. So, if your zone or your supply zone is too far away, just use resistance or psychological levels as targets. So 620 and 630 were kind of my targets, 630 being my final target. So now if we go down to an intraday time frame, I want to pull up the SPY and Q's chart side by side because there was relative strength this morning. Let's go over to Netflix. This Microsoft chart is really annoying because this is a really, really important level, but we have 2 hour supply above, and one of my rules is if we have supply above, and it's fresh, I cannot take the trade. But let's go to Netflix now. I already I already labeled my entries and exits because I was journaling my trade this morning. But this was my entry right before the 616.85 break. Um, if I go to SPY in Qs, you know, Netflix, Nasdaq, more weighted in Qs than SPY because it is a tech stock. So the first thing I saw was we had this green candle and we had this red candle, as opposed to two strong green candles on Netflix. So that was kind of my first thinking. It wasn't the most clear relative strength, but buyers were definitely more interested in Netflix than Qs, because Qs had one green candle and one red candle. So that in my mind was not very very obvious relative strength, but it was letting me know that buyers were willing to pay a higher price on Netflix to move us higher. So I entered my position right here. We immediately, popped $1 on the contracts. I wanted to scale out first at 620, but I picked up something on Qs, and this is what I mean by being very very reactive in the market. I wanted to take profit at 620 because that was my first TP, but I had to adapt to the market. I saw Qs not moving higher. I was expecting a 5-minute RBR or at least some sort of consolidation before a move up, but instead we had this very very aggressive selling candle on NQ. So after seeing that and after knowing these market conditions, breakouts are not, are I wouldn't say not the highest probability play because I only take high probability plays. But breakouts are definitely lacking continuation as opposed to the beginning of the year. So I sold half as we broke above 618, and then once we started pulling back in, I sold half of the position. And then I was gonna be a little bit lenient on the remaining half of my position. My stop for that was going to be a break below 616, and then as we moved below 616, I noticed two things. Qs was breaking low of day. SPY also had a very very nasty sell off at this point, and what I really didn't like about Netflix was um, we moved $3-4 above the level, or $2 or $3 instantly, and then within the next second we instantly failed. So that is a very very bearish sign. You obviously can't tell this from this chart, but healthy price action is when we break a level, we pull back to it, we hold the level, we move higher. But what I saw is us break the level and us instantly fail. So I'm saying within like the next 15-20 seconds, we instantly pulled back $3 or $4. That is not normal. That is not normal price action on Netflix. That is definitely not a pullback. That is definitely sellers, stacked at 618 through 619, and hence I sold the remaining two of my contracts at a loss. So overall, I I don't know exactly how much I made, but I know I made 2.8 return on investment. So it was a break even trade. Nothing I could do about it. I wasn't comfortable entering. I wasn't comfortable re-entering Netflix because of this wick. My gut feeling was this was such an aggressive reaction at 618 through 619 that even if Netflix does go higher, I don't want to be a part of it. And I think I made the right decision because even though we did break the highs, we've been consolidating for the last 30 to 45 minutes. Well, if you go to Qs easily broke high of day and is getting ready for a push higher. But that is my entire analysis on Netflix. It is a shorter video, so I do recommend you rewatching it if you don't understand parts of it. But as always, if you have any questions, just hit me up on Discord or leave a comment in the comment section below. And I'll be back to trade tomorrow, last day of the year, and I will definitely be here to trade in 2022.